Chili's Grill & Bar, a well-known name in the casual dining segment, has recently experienced a remarkable resurgence in popularity, defying industry trends of declining traffic and flat sales. Despite the broader challenges facing the casual dining sector, Chili's has managed to achieve a 15% increase in same-store sales during the fourth quarter of 2024 compared to the same period in 2023. This significant turnaround in a struggling market has left many wondering, what has changed at Chili's, and can they sustain this success? A strategic shift. Back to fundamentals, Chili's parent company, Brinker International, which also owns Maggiano's Little Italy, reported total revenues of over $4.4 billion in fiscal 2024, marking an all-time high for the company. This resurgence didn't happen overnight, but is the result of a carefully orchestrated turnaround strategy initiated by CEO Kevin Hochman, who took the helm in 2022. Hochman's approach was rooted in simplifying operations and refocusing on the fundamentals of casual dining, a strategy that may seem straightforward but proved challenging to execute effectively. Norman Brinker's legacy and the rise of Chili's, founded in 1975 and acquired by Norman Brinker in 1983, Chili's was a pioneer of the casual dining concept, which quickly set it apart from its peers. The chain expanded rapidly, reaching a peak of over 1,300 locations in the U.S. by 2008. However, the economic recession hit the casual dining sector hard, prompting many consumers to eat more meals at home. Chili's began to lose its way, often pursuing menu expansions and other initiatives that diluted the brand's core identity. As a result, the chain saw a steady decline in store count and struggled to maintain its market position. Simplification and operational excellence. Upon taking over, Hochman and his team recognized that the overly extended menu was one of the key factors hindering the restaurant's performance. By simplifying the menu, cutting it by over 20%, they not only reduced operational complexity, but also improved the quality and consistency of the food. This decision was a bold move in an industry where adding new menu items is often seen as a quick fix for boosting sales. However, Hochman's strategy paid off. Chili's was able to grow its business and improve guest satisfaction metrics, outpacing industry averages. A renewed focus on in-restaurant experience. One of the major changes under Hochman's leadership was a renewed emphasis on the in-restaurant dining experience. Previous efforts had diverted significant resources towards takeout, delivery, and virtual brands, which, while popular, often came at the expense of the on-premise business. By refocusing on the core dining experience, Chili's was able to improve its reputation as a fun and vibrant place to eat. This shift, coupled with investments in technology, culinary innovation, and an enhanced atmosphere, helped make Chili's relevant and appealing to consumers once again. Marketing and social media. Savvy Chili's also benefited from a savvy marketing approach that tapped into nostalgia and leveraged the power of social media. The brand's efforts to re-engage with its audience were visible in the increased marketing spend, which saw a $14 million increase in the fourth quarter of 2024 compared to the previous year. A key component of this strategy was embracing viral trends, like the now famous mozzarella sticks that gained widespread attention on TikTok. The Triple Dipper appetizer, which includes these mozzarella sticks, became an unexpected star, driving a significant portion of the company's recent sales growth. Value proposition in a time of rising costs. One of the most crucial aspects of Chili's comeback has been its ability to deliver value to customers during a time of economic uncertainty. The inflation rate for limited service dining has outpaced that of sit-down restaurants, making Chili's $10.99 Big Smasher meal a particularly attractive option for budget-conscious diners. This focus on value has allowed Chili's to compete effectively not only with other casual dining chains but also with fast food restaurants, positioning itself as a higher value alternative in a price-sensitive market. Investments in staffing and facilities. Brinker International has not shied away from making significant investments to support this growth. In fiscal 2024, the company invested $200 million in capital expenditures aimed at repairs, maintenance, and overall restaurant improvements. They also allocated an additional $5 million to staffing in order to accommodate increased traffic. with plans for further labor investments in 2025. These efforts reflect a commitment to enhancing the customer experience and sustaining the operational momentum that has driven recent successes. Challenges and the path forward. Despite these gains, Chili's faces challenges, particularly in maintaining profitability while balancing value offerings and operational costs. Although the company has seen strong sales, it missed Wall Street's earnings expectations in its most recent quarter due to increased spending on staffing and facility improvements. This underscores the delicate balance Chili's must maintain between investing in growth and managing financial performance. Chili's strategy includes what they describe as a barbell strategy, offering both high-value items and premium options to cater to a broad spectrum of customer preferences. This approach aims to attract both budget-minded guests and those willing to spend more, thereby maximizing sales opportunities across different customer segments. The role of income demographics. Chili's Resurgence also reflects broader trends in the dining industry, where casual dining chains are increasingly seen as alternatives to fast food. This shift is partly driven by income demographics, as casual dining generally attracts a higher income customer base compared to fast food. With economic conditions affecting lower-income consumers more significantly, chains like Chili's, which cater to higher earners, are better positioned to capture discretionary spending. Looking ahead, the key test for Chili's will be sustaining this momentum over the long term. While the company has successfully driven traffic and sales growth through a combination of value offerings, marketing savvy, and operational improvements, the challenge will be to continue evolving with consumer preferences and economic conditions. The ability to maintain a balance between value, quality, and profitability will be critical as Chili's seeks to solidify its comeback and build on its recent success.